Hello everybody, so this video is entitled No Comeback, a $2 trillion wipeout today for the S&P 500. I'm talking peak to trough. Of course, the market opened up with a bang. It was beautiful, lots of hype, people were happy, perhaps a deal was coming, lots of new information had been coming out that we had been expecting since the weekend. Poaches talked about the matter, many people talked about the matter, and of course, the market had the usual movement of dumping all day, slow bleed all day, people slowly selling all day. This is a pattern we've witnessed for many, many days now. Namely, the past 3 trading days have been bleeding all day consistently. And of course, I'm talking about growth stocks. I'm talking about hyper-growth stocks. I'm not talking about the market as a whole. I'm not talking about the banks. I'm not talking about Walmart. I'm not talking about Costco, right? I'm talking about innovative companies, the stocks that I cover on this channel. And of course, you could say, oh, well, look, Meta was up today. Well, Meta was up 2% today, yeah, but it had cratered so bad last week that, I mean, it's barely anything. It's barely a relief considering how Meta had cratered. The thing that matters to me is that Tesla keeps dumping. Broadcom, right? Another darling, kind of a mini Nvidia here. Broadcom dumping, and Nvidia, the darling of the market, dumping. Micron dumping. Like, super innovative companies are dumping, and still these are the bigger companies that are dumping. The smaller companies are doing, of course, way worse, and they're even less impacted. Like, the smaller companies are doing even way worse, and they are way less impacted by macro trends. When you are a super high growth small player, you're way less impacted by macro trends. I mean, your growth entirely outweighs any economic downturn, even a recession. If you're growing 50% a year, your revenue, even a recession where the economy drops, your top line is still going to grow like crazy because your product is getting adopted. It's the fundamentals. But unfortunately, I've been unable to cover the fundamentals of stock for like weeks now because all of the market cares about is oil and the macro. And of course, oil was up today all day long, and it's as if growth stocks, innovative stocks are a reverse oil price, right? Reverse the oil future stocks, and you have the growth stocks. And so, of course, completely nonsensical. HIMS is down on over 3%, which is completely nonsensical if you follow this company. Nebius. Do they have something like $45 billion of revenue coming up or something like that over the next 5 years? Something like that, right? Off the top of my head, down 8.5%. Actually, much of the date was down more than 10%. Again, entirely nonsensical. Bitcoin and strategy, Bitcoin's supposed to be the ultimate asset right now. Actually, it's been outperforming gold for the past month. But that too is considered, growth bad, so they're like selling it. Nvidia and Micron. Look at Micron. Micron is kind of a poster child of the stock price movements of the past 3 days. The past 3 days bleed. The market makes absolutely no sense. I don't even know what to say. It makes absolutely no sense. And we have literally the kind of a pilot of the economy, right? Jay Powell, listen. Did you listen to the Harvard speech today? Like, he had many opportunities to calm the market. The students asked many questions and said, I'm not going to comment on that. I'm not going to comment on that. I'm not going to comment on that. And the questions were like, so how do you make your decisions? Like, they ask like this, and sure, he sounds very smart, and I think a lot of people get fooled, like, because just because you sound educated doesn't mean that somebody has a proper handle on the situation. Because when I listen to this speech, it sure sounds to me like interest rate cuts and hikes are decided on vibes. And like, it's literally vibes. Oh, well, I gotta call the committee members and we have a few conversations per cycle. Oh, no, we don't only rely on the models. We have models, but we also look at this and we look at that. Like, it's literal vibes. I mean, that is what it is. Yeah, sure. He sounded very smart saying it, and I'm fully aware that people are very sensitive when somebody sounds smart. But just because you sound smart doesn't mean you're making the right decisions, because the US is headed for a catastrophe with the spending right now, with the rates being stubbornly high, the government rates being stubbornly high, right? The bond rates stubbornly high, and the debt rising in a more parabolic way than before. We've added a bunch of extra costs. Now 36 trillion, this Iran event, macro event, $36 trillion. And that's just first order, right? That's just first order. There's secondary order. Like, we know, for example, any military spending in the now has like huge repercussions, because then you have the VA that has to spend a lot of money for the longest time after that, and it's not taken into account. And you know, the last thing I want to talk about is briefly is safe havens, right? Is there anywhere to hide? You know, to me, Walmart is at all-time high. To me, the banks, I'm running away from that, especially what's going on with private credit. You know, I like the assets that I have, right? I love Tesla. I love Bitcoin. I love disruption. So unfortunately, I just have to stay through the pain. But the pain is real. And here's the thing: for people getting into bonds right now, I do want to point out this: that if you're getting into bonds, you better be hoping then the rates drop so that your bonds go up, right? You want the interest rates to drop, right? But what's the discussion right now? The discussion right now is perhaps they may raise interest rates. I saw news out of Europe all over trying to figure out whether Europe's going to raise interest rates because fuel prices in Europe are through the roof. So what do you think is going to happen to the bonds if the governments, if the central banks continue their bluff, and even worse, double down on their bluff and actually raise the rates, right? If you follow economics, that's how the 1930s depression got started. They kept the rates high instead of helping the economy. They could afford to do that then. They can't really afford to do that now, yet they're still doing it. So what I'm trying to say is the bonds may not be as safe as even people think, because if they raise the rates, what do you think is going to happen to the bonds? Anyways, this madness needs to stop. This is taking a lot of people away from the stock market. You know, the stock market is a wonderful machine. Unfortunately, it has not worked for quite a while now. And gray swan after gray swan after gray swan. Now we have the Iran black swan, as I call it. Like, how many crises are we gonna have? How many self-inflicted wounds are we gonna keep giving this market going forward? Right? Like. This needs to stop. I don't know what to say. I mean, I'll be here for it, but I want to go back to fundamentals. I want to go back to actually figuring out how companies grow the top line and analyzing the business and analyzing what they do. And unfortunately, this noise is messing up so many good companies. I can tell you one thing: if you are a CEO, if you have a company, if I was a public CEO, I would regret going public, first of all, and I would just stay private. Just stay private, because some of the nonsense these companies are being mistreated by the market, it's very much nonsensical. Yeah, just stay private. Not advice, of course. This is not investment advice on this channel, ever. Not financial advice. I'm hoping you were entertained. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me next. Thank you for watching, and have a wonderful, wonderful day.